Now let's talk about the other market that I'm heavily invested in, which I'm really bullish about this year and the years to come, and that's the China stock market. Now, some people, especially they don't understand China, they've got some concerns about China, like, economic growth is slowing, and it is slowing, right? It is projected to slow to 5.8% in 2020, down from 6.1% in 2019. But again, bear in mind that the US GDP growth rate is only 2 to 3%. So China is growing at more than double that of the US markets. The other concern is Chinese companies have rising corporate debt levels. Well, so do US companies, right? And Chinese debt to GDP ratio is also rising, which means the Chinese government is taking on a lot of debt, right? And of course, the ongoing trade war could resume anytime, causing stock markets to become very, very volatile, right? So these are the reasons why people may stay away from the China markets. And to me, these are very, very small concerns, because the tremendous profits that are going to be made in this market are going to overshadow these small concerns. So why am I so excited and bullish about the Chinese markets? First of all, let's talk about the advantages. The Chinese government has the fiscal and monetary tools to easily stimulate the economy and stock markets as compared to the Eurozone and the US government. Why? First of all, Chinese interest rates are not at an all-time low. So the Chinese government is able to reduce interest rates a lot more easily in order to stimulate growth. At the same time, the Chinese government is spending heavily on infrastructure. Government spending, also known as fiscal stimulus, can stimulate the economy easily as well. The other big thing that's happening is that MSCI, which is the global standard, the Morgan Stanley Composite Index, is now including China Shanghai A shares into its emerging markets index. So this will cause many foreign institutional funds like US and European funds to begin to invest in China, because it's now part of the emerging markets index, and we expect over 400 billion yuan, Chinese yuan, of foreign inflows into mainland China A shares over the next 5 to 10 years. So you know that when money is flowing into China from all around the world, from Europe, from the US, through these big funds, billions of dollars, that is going to lift the value of Chinese stocks tremendously in the next 5 to 10 years. Now, in the past, China used to be known as a counterfeit country, right? They copy and make fake goods. They are like a copycat country. In the past, China has been known as the world's factory, where they manufacture cheap stuff for everyone in the world. Hey, no more. If you've been to China in the last couple of years, you know that the entire country has transformed tremendously, right? Now, I'm not from China, from Singapore, and I visit China once every 5 years, and my God, let me tell you that China is way ahead of Singapore, of Europe, or the US in terms of technology, in terms of productivity, in terms of its human capital. It is freaking amazing. It blows your mind. If you have not been to China, go there, it will blow your freaking mind. So, in fact, specifically Chinese tech companies are now among the leaders in global innovation. In what specifically? In artificial intelligence, in financial technology or fintech, in mobile payments, and in health tech. Do you know that if you go to China now, for example, you go to like Beijing or Shanghai, they don't use cash anymore, right? People now pay with their phones, with their Apple watches, with QR codes. In fact, if you use cash in China, you can't buy any because no one takes cash anymore. That's how advanced the economy is. In fact, it's so advanced that beggars in China, beggars don't take coins or cash. Beggars take payments through Alipay, through Apple Pay, and through QR codes. Beggars on the streets. Can you imagine that, right? And like it or not, the long-term growth of the world economy is coming from China, not from the US. Now, the highest growth coming from China is in China's consumer tech sector. All right. And in the next 5 to 10 years, the country is pivoting towards a consumer-focused economy, just like the US. versus a manufacturing industrial based economy. So that's the macro picture of China. Now, here's the interesting thing. So China is now leading the world in technology, right? Take a look at some figures over here. This is the share of global artificial intelligence patent applications. And China is leading the US and Japan in AI patent applications. In terms of share of global AI investments, China leads the US and India tremendously as well. In terms of share of AI talents and experts, the US is still leading China and India, but China is soon catching up. All right. A share of papers published in the field of AI, again, US is still number one, China's right behind. Share of AI companies as of June 2018, US 41%, China 20%. But as of now, 2020, China has caught up tremendously, almost that of the US as well. Okay, so China has tremendous growth. If you look at the top 10 internet companies in the world, they used to be only the US and Europe. Okay, right now if you look at the top 10, 1, 2, 3, 4 out of the 10 are Chinese companies. Tencent, Alibaba, Baidu, and JD.com. And in fact, this was as of September 2019. As of today, officially, Tencent, all right, has overtaken Facebook in terms of market size, market capitalization. Okay, so that's the tremendous growth. And if you ignore China, if you don't invest in China, you're gonna miss out a huge part of the growth in your portfolio for years to come. Now, here's the most exciting thing about it. China is growing at double the rate of the US, all right? But in China, only 7% of Chinese own stocks. But in the US, 50% of Americans own stocks. So what does this mean? And by the way, the US has 300 million people. China has close to 1.4 billion people. So as China gets more and more advanced, more Chinese, as they get more affluent, they get richer, they start to invest in the stock market. So think about it. When 93% of Chinese people start to invest in the stock market, from 1.4 billion people pouring their savings into stocks, the stock market is going to explode really, really high. Whereas in the US, already 50% own stocks, so there's not much more money that can flow into US companies as compared to China companies. Now, valuation. This is the part that I find the most compelling. I said earlier on that the US markets are fairly valued or overvalued. They're expensive, right? But Chinese stocks, despite its big run last year, is still undervalued. This is the PE ratio of the Shanghai Composite Index for since 2002 to where we are today, right? And you can see the PE ratio has been as high as 70, right? As low as about 10, okay? So if I were to take a median, if I take an average, I would say it would be somewhere at about 30. Or you could take even 25 to be more conservative. So what does this mean? Right? This means that at about 20-25 PE ratio, Chinese stocks are fairly valued. Above that is expensive, below that is cheap. And where is it right now? Currently, the Shanghai Index has a PE ratio of 14.51, which is somewhere about here. So Chinese stocks are historically undervalued right now. Okay? If you look at the Hong Kong Hang Seng Index, because of the China riots, it has been even more undervalued. Hong Kong has a PE ratio of 11. And again, if you take a look at the Hong Kong markets, right, since 2010 for the last 10 years, you can see that the average PE ratio is about roughly about that. about 13 PE ratio, right? So right now it's at 11 over here. That's the current PE ratio, price to earnings ratio, and it's really undervalued, okay? So growth potential is tremendous. Stocks are undervalued. Let's look at the charts. Let's look at the technical analysis. All right, here we go. So this is the Shanghai Composite Index, and we're now looking at the daily candles, right? So you can see that it was on a downtrend over here because of the trade war, and we have got a very nice reversal in trend over there. All right, with the 50 moving average crossing above the 150 moving averages, and right now the price is above the 200 moving average as well. Okay, so you can see a level of support over here. Prices are making higher lows. The only thing is you can see right now there's a bit of a resistance level here, right? You can see a strong level of resistance, right? So in the next couple of days, I expect the price to break out of that level of resistance, and once it breaks out, that would trigger the start of a very strong move in the China markets. Now again, this is looking at the daily candles. We zoom out and look at the weekly candles, or rather the monthly candles, right? You can see the longer term perspective. Like I said, markets don't go in a straight line. They are made of bull markets and bear markets. Now you can see, for example, over here, right, this was a bull market, right? An uptrend, then we had a bit of a downtrend bear market there, a huge bull market, a huge bear market, so it's been very volatile, all right? Coming down to here, bull market over there, bear market over here. You can see a strong level of support at the 200 moving average on monthly candles. So currently we are now here, all right? This is where we are now at about 3,000 points. So the way I look at it is we are right now at the bottom of this current bear market here, right? And we are just at the beginning of the next bull market. Now, question, how much would the market move during this new bull market? I've got no idea, I can't predict the future. But based on history, you can see that it's made a big move here, a big move here. I expect this to go to at least about 5,000 points from 3,000 points. So from 3,000 points to 5,000 points, that's almost an 80% growth for the short term in China. But in the long term, I expect Chinese stocks to easily double in value from where they are today. So how do you gain access to the China markets? Now, here's the good news. It doesn't matter whether you are an investor in the US, in Europe, in Singapore, in Malaysia, anywhere in the world, you can buy Chinese stocks or Chinese ETFs that track the Chinese indexes. Okay, now you can buy Chinese ETFs listed in Hong Kong or can buy them listed in the US markets. So I buy them in both markets. And for most people, it's easier to buy them in the US markets, right? So let me show you a few examples. So one of the ETFs that's listed in the US markets that tracks the China index is the ASHR. Okay, the ASHR, this is the China ETF that tracks the Shanghai index, right? And you can see what has happened recently over here. Let me just put in my studies. There we go, right? You can see a big downtrend here. We've got the trade war, right? And there was a huge reversal initially, and then it was going sideways. You can see a consolidation pattern over there, right? And you can see it's strong support at the 200 moving average, and you can see the price has now broken out here, right? So the price right now is about $29 per share, okay, 29 US dollars per share. I expect it to correct down back a bit before I start to add more shares. I was buying a lot of shares over here at the level of support, so now it's broken up, and I expect it to start to take off really soon. All right. So this tracks the Shanghai index. Another ETF which I use tracks specifically Chinese technology companies, Chinese internet companies like Meituan Tianping, which is one of my favorite companies. You've got JD.com, you've got Alibaba. So all the Chinese tech companies, they're tracked using this ETF known as KWEB. right? And you can see again, it's been a very strong trend over here, right, where it's been breaking out to a strong uptrend. So those of you who've been getting my monthly reports, you would have been in this ETFs, all these ETFs for the last couple of months or even years, and right now you can see a huge run in it, making good money, but it's only the beginning. I expect this to again double, triple in the time to come. All right, so let me do a quick summary on my overview and strategy for China markets. So starting this year, in fact starting last year, I've been increasing my allocation to China stocks compared to US stocks. So I still have a lot of US stocks and ETFs in my portfolio, but I'm increasing my China allocation because I expect China to again outperform the US in time to come. Now, out of all the emerging markets, basically emerging markets are beginning to recover, right? The US has taken off, emerging markets have not taken off as much, so they're going to be taking off really soon. You can see this is the S&P 500 going up. Emerging markets only beginning to make a turnaround. So among the emerging markets, again, Chinese equities are my favorite because of their strong growth as well as reasonable valuations compared to other emerging markets. Now, here's the thing. Chinese stocks may seem vulnerable to trade tensions with the US, but that's just a misconception. Why? Because in fact, out of the country's companies that are listed, only 2% of their sales revenue comes from the US. Only 2%, right? And 86% of Chinese companies' sales revenue comes domestically, making the market among the least exposed to trade within emerging markets, right? So if you look at emerging markets like India or Russia or Southeast Asia, they are very much affected by the US trade policies, right? But like I said, in China, only 2% of their revenues come from the US, right? 98% are domestic, okay? And that's why with all this kind of like deglobalization, protectionism happening, I find that Chinese companies are the safest among emerging markets to own, right? But bear in mind, there are Chinese companies with a lot of debt, especially real estate companies and banks and manufacturing industrial companies. I avoid those. I only invest in Chinese companies that have secular growth drivers, which are involved in technology and growth like 5G, cloud computing, fintech, health tech, and artificial intelligence. And I only invest in companies which have low corporate debt. All right. So again, if you're getting my monthly report, you subscribe to my monthly newsletter, you know exactly what are these companies I'm looking at, which I'm buying, and you can take a look at them yourself because these are the ones that are going to really explode your portfolio to the upside in the next couple of months and years. So if you want to be the first to get my next video on YouTube, do click the subscribe button right now. If you want to check out my online courses, go on to piranhaprofits.com where you can enroll in our professional Forex, stock trading, options trading, and value momentum investing courses where you're going to learn how to trade like a professional and generate an income anywhere in the world. If you would like to come to Singapore to attend my live classes, Wealth Academy, go on to wealthacademyglobal.com. It's Adam Khoo, and may the markets be with you.